EPK Capital presents Daily Brief for 27th October 2025. Hello and welcome to EPK Capital's Daily Market Briefing. I am your AI host, Root Vic, bringing you the most critical financial news and analysis from the last 24 hours. If you looked away from the markets on Friday, you missed a historic surge. We are starting this week with U.S. indices at fresh, all-time highs. The question is, why? And can it last? We have a lot to cover: a game-changing inflation report, major political comments on trade, and two of the biggest crypto adoption headlines of the year. Let's get into it. The numbers are record-breaking close. First, let's look at the scoreboard from Friday's close. It was a sea of green. The Dow Jones Industrial Average soared over 500 points, closing at 47,249. The S&P 500 breached a major milestone, closing above 6,800 for the first time ever, ending the day at 6,805. And the Nasdaq Composite led the charge, jumping to 23,236. This wasn't just a US story. In Europe, London's FTSE 100 also posted a new record high, and the Pan-European Stocks 600 is building on those gains this morning, cooling inflation and the Fed. So, what lit the fuse for this massive rally? The answer is one word: inflation. On Friday, we received the U.S. Consumer Price Index (CPI) report. The market was bracing for a 3.1% year-over-year increase. The actual number came in cooler, at just 3.0%. Now, 0.1% might not sound like much, but in the world of central banking, it's a massive signal. This cooler data immediately changed the game for the Federal Reserve. The market is no longer hoping for interest rate cuts, it's expecting them. The consensus is now firmly pricing in a rate cut from the Fed at its meeting next week, with another one to follow in December. As soon as this news hit, you saw the bond market react. The 10-year Treasury yield, which dictates everything from mortgage rates to stock valuations, fell back to 4.02%. When yields go down, risk assets like stocks look much more attractive. The macro backdrop, PMIs, and a shutdown. The inflation report was the main event, but it was supported by other key data. We also got the flash PMI data, which gives us a real-time snapshot of the economy. The U.S. Composite PMI showed a strong start to the fourth quarter, rising to 54.8. This was driven entirely by the robust services sector. Manufacturing, while still weaker, showed signs of improvement. This data is especially critical right now because the U.S. government is in its fourth week of a shutdown. With many official government reports delayed, investors are relying heavily on this private sector data. And on Friday, it told them the economy is still solid while inflation is cooling. This is the Goldilocks scenario markets dream of. Growth isn't collapsing, but inflation is easing enough for the Fed to cut rates. We also saw similar positive PMI data out of the UK, adding to the global optimism. The political catalyst, a thaw in the trade war. The second major factor driving this rally is political. Just a couple of weeks ago, the market was in a panic over a re-escalation of the U.S. China trade war. President Trump had threatened a massive increase in tariffs, with some reports even floating a 100% tariff on certain Chinese goods. Well, over the weekend, that narrative completely flipped. President Trump announced that the U.S. and China are set to come away with a trade deal, and he is scheduled to meet with his Chinese counterpart later this week in South Korea. This has taken the worst-case scenario of a full-blown trade war off the table, at least for now. The market is breathing a massive sigh of relief, and that relief is being priced in as a major rally. The Crypto Corner, two bombshell headlines. Finally, let's turn to the crypto world, because the news this morning is arguably just as big as the stock market rally. First, some context. The crypto market is still recovering from its own flash crash a couple of weeks ago, which was triggered by those very same trade war fears. Bitcoin had tumbled from near $126,000 to below $105,000. This morning, it has stabilized and is trading around $115,000. But the price isn't the main story. The adoption news is. This morning, JPMorgan, in a significant policy reversal, announced it will now allow its institutional clients to use Bitcoin and Ethereum as collateral for loans. This is a monumental step from one of the biggest banks in the world, fundamentally validating these assets for use in traditional finance. In regulatory news, President Trump has nominated Michael Saylor to be the new chair of the CFTC, the agency that regulates commodity markets, including crypto. Selig is currently the chief of the CFTC's crypto task force and is widely viewed as crypto-friendly. This nomination signals a clear, positive regulatory path for digital assets in the United States. These two events, massive institutional adoption from JPMorgan and a clear regulatory path from the White House, are providing a powerful tailwind for the entire digital asset class. Conclusion. So, to recap, we are starting the week at all-time highs. This rally is built on a powerful combination of cooling inflation, solid economic data, a major de-escalation in the U.S. China trade war, and landmark adoption news in the crypto space. All eyes will now be on the Federal Reserve's interest rate decision next week. And that's all for this video. But before we go, just a quick reminder that this video is for educational purpose only and should not be taken as financial advice. Thanks for watching. If you found this video valuable, please hit the like button, subscribe to our channel,